All right, so picture this. A company with basically zero revenue just jumped almost 200% in a single day. We're talking about a stock that went from the basement to the penthouse in 24 hours. And here's the kicker. It's still down 70% from where it was less than a year ago. This is Solidion Technology, ticker STI. And if you haven't heard of them, you're not alone. They're a micro-cap battery tech company that most people had completely written off. But then they dropped a product announcement last week, and the internet lost its mind. So what's actually going on here? Is this the next big thing in batteries, or are we watching retail traders pump up another penny stock that's going to crash back down to earth? Let's dig into it. First, who is Solidion? They're basically a research company that makes next-generation batteries. Think silicon anodes, solid-state lithium cells, lithium-sulfur batteries, the kind of stuff that sounds amazing in a lab but is insanely hard to actually produce at scale. They went public earlier this year through a SPAC merger. Basically, that's when a shell company that's already listed on the stock market merges with a private company to make it public instantly. It's like borrowing someone else's ticket to skip the long IPO line. It's basically a shortcut to the stock market. The SPAC merger was finalized in early 2024 between Nubia Brand International Co. and Honeycomb Battery Company, which then rebranded as Solidion Technology, STI. And from day one, it's been rough. The stock peaked at $55, then absolutely cratered. By spring, it had fallen so low that NASDAQ threatened to delist them for trading under $1. So what did they do? They pulled the classic move, a 1-for-50 reverse stock split in May. That means if you owned 50 shares, suddenly you only had one share. The price looked higher on paper, but you didn't actually gain anything. It's like cutting a pizza into fewer slices and claiming each slice is worth more. Mathematically true, but you still have the same amount of pizza. After the split, the stock still kept falling. At one point, it was trading under $3. That's like buying a house and watching it lose 95% of its value in months. Brutal. Here's where it gets interesting. Solidion has over 500 patents. They've partnered with Oak Ridge National Laboratory. In September, they won a major R&D award for creating a sustainable graphite process. So the tech is real. The problem? They have no revenue. Like literally almost none. Last quarter, they made $4,000. Not $4 million. 4,000. Now, you're probably thinking, how is a company with $4 grand in sales worth $40 million? Great question. The answer is hope. Pure speculation. Investors are betting that one day, maybe soon, this tech actually becomes a product people want to buy. And that's exactly what happened on October 13th. Solidion announced something called the Peak series. It's a UPS battery system designed specifically for AI data centers. You know how data centers need backup power in case the grid goes down? Well, AI servers use a ton of power, and Solidion's claiming their battery can do the same job in 30% less space and last 3 times longer. That's a big deal if it's true, because AI companies are building data centers like crazy right now, and they all need reliable backup power. So suddenly, Solidion went from being this vague research project to actually having a product with a real market. The stock exploded. It more than doubled in one day. Pre-market, it was the #1 trending ticker on StockTwits. Retail traders were all over it. And honestly, I get why. This felt like one of those moments where you catch a small company right before they break out. But here's the part most people miss. Solidion is not out of the woods yet, not even close. As of mid-year, they had $115,000 in cash. That's it. Their auditors literally said there's substantial doubt about whether they can keep operating without new funding. That's accounting speak for this company might go bankrupt. So yeah, they announced a cool product, but they still need money to actually make it. And they need customers to actually buy it. The Peak series isn't even available until Q1 2026. So we're talking about months away from seeing if this thing actually works in the real world. Let me show you the monthly chart of STI. We're right here. See that? Even though it looks like a huge boom on the daily chart, sometimes when in doubt, zoom out. I'm just trying to show the bigger picture here. Now, let's talk numbers for a second. Solidion burned through over $3 million in the first half of this year. They're losing money every quarter. And even though they just cleaned up their balance sheet by converting some warrants into equity, that also means they diluted shareholders. The share count almost doubled. Here's an analogy. Imagine you own 10% of a pizza. Then the company cuts the pizza into twice as many slices so they can give some to new investors. You still have the same amount of slices, but now your 10% is worth less because the pizza got bigger. That's dilution, and it's a real risk here. On the flip side, those new investors who converted their warrants, they agreed to hold their shares for a year. That's actually a good sign. It means they believe in the long-term story, and the company hinted that a large strategic investor might be coming in soon. If that happens, like if a major battery manufacturer or automaker decides to partner with Solidion, this stock could go way higher. So what's the technical picture look like? Well, the stock is insanely overbought right now. The RSI is at 91. Anything over 70 is considered overbought. Over 90? That's rare. It usually means a pullback is coming. The stock is trading almost 200% above its moving averages. That's not sustainable. But here's the thing. Momentum can stay irrational longer than you'd think, especially with a stock like this that has a tiny float. There's only about 1.4 million shares actually trading. So when buyers pile in, the price can move fast in either direction. Support levels to watch? Around $9 is the first one. That's roughly where the stock opened the day of the big spike. Below that, $5 is another key zone. That's where it was trading before the UPS announcement. If it breaks below 5, we're probably looking at a full reversal. Resistance? The next stop could be the low 20s. But honestly, at this point, it's anyone's guess. Let's talk risk for a minute because there are a lot. First, they need funding immediately. If they don't raise cash in the next few months, they're done. Second, they don't have a proven product yet. Everything they're selling right now is just promises and prototypes. And they're competing against giants, companies like Panasonic, LG Energy, CATL. These guys have billions in funding and decades of experience. Solidion is a 28-person team trying to go up against that. And then there's the volatility. This stock dropped 80% in a few months, did a 1-for-50 reverse stock split just to stay listed, and then doubled in a day. That's not normal. If you can't handle that kind of swing, this is not the stock for you. But let's be real, the upside is also massive if things go right. If Solidion lands a strategic partner, if the Peak Series actually gets orders, if they secure government grants or a DOE contract, any of those could send this stock way higher. We're talking about a company with a $44 million market cap in a battery industry worth hundreds of billions. The math is simple. If they execute, even capturing a tiny slice of that market makes them worth a lot more. So what's my take? This is not a buy and forget stock. This is a speculative hold at best. If you got in early and you're up big, maybe take some profits off the table. But don't bail completely if you believe in the story, because the next few months are going to be wild. For new investors, I'd wait for a pullback. The stock just ran too hard too fast. Let it cool off. Maybe it dips back to $9 or $10. That's a better entry than chasing it at all-time highs after a 200% spike. The key dates to watch are November 18th. That's when they report Q3 earnings. If they announce funding or a partnership, this thing could rip again. If they don't, expect a sell-off. And then Q1 2026 is when the Peak Series is supposed to launch. That's the make or break moment. If they actually ship product and get customers, this story changes completely. So yeah, while everyone's either hyping this as the next Tesla or calling it a pump and dump, the truth is somewhere in between. Solidion has real tech, real patents, and a real product coming. But they also have no money, no revenue, and massive execution risk. This is venture capital disguised as a public stock. You're not investing in a business. You're investing in a bet that they'll survive long enough to become a business. And that bet could pay off huge or go to zero. Anyways, I hope this video helps you on your quest for profits. Catch you on the next one.